Welcome friends and traders. We are going to look into the trend bias detection using the trend VWAP indicator. This has been placed on the hourly chart for NQ, as you can see. Now we have quite a bit of information being displayed here. So you can see there are a bunch of lines coming out of this structure. So what are we looking at? We have multiple time frame VWAP. You must have seen that us doing it on ES for a while. Now I want to revisit this again one more time. This is how the big players keep things rolling for a while. They have a clear direction for a given segment, and now this is done on the hourly chart, which means trend can last for a day or two. So that is what we are looking at, the directional impulses we want to go after and where might be the turning points. So when you're testing this, you can go back 2 years, right? This is 2 years history. Very first thing is these two lines, obviously they are separating and they cross, which happened here 2 years back. At this moment the trend is up, and extra confirmation come when the hourly also VWAP takes over. As long as this hourly is above these lines and these lines are separating, these are 4-hour and daily VWAPs, I am going to be looking for longs only. Alright, this is 1500 points of ES move, sorry, NQ move. So that is what it is. Now we can look at how to look at some reflection points and things like these, but you need to first of all understand your trend. Most people cannot figure out the trend, and this is how banks do it, because this is where we worked and this is where we learned, right? So all right, now as you can see, market is going flat. When market is going flat, VWAP is not turning. That's why it is chopping. It's pretty clear. Then it takes off, right? So early part is always a little risky when the trend is flipping. You can always create apexes, always. That defines the entire structure. If you don't do apex, you don't know where the energy is piling up. Alright, so we created this apex, right? The market is compressing. We know it's going to blast one way or the other, and where the market has been coming from, it is most likely going to go and collapse. And this hint was already given by this 1 hour VWAP, and then market collapsed. So you need to measure all these points. You can claim if you go and do your testing. You must collect your own data, because your mind has to see, your mind has to adapt to all these things. Now market has taken a short bias, right? It is going to be short bias. Then market is turning up again. So what you need to do is count these targets. We can use C54, we can use all the methods, but this is telling us the pure trend direction. And second thing we must always do is look at the distance offset, right? Max distance offset. If I look at this VWAP, how far away you went from it, and it started collapsing, now I know where it is going, right? So there it is. There we go. When it reaches the maximum distance from this ecosystem, 20 days down the line, it did the same thing. It got reflected from this. Alright, so now I'm looking to go long Either you can just go early long here, multi-add, or you can just stay when it really transfers the hourly VWAP above these high time frame VWAPs. And then we get another huge boost. All right. So this is how you get a very extremely highly successful sequence of things. And there it is. Go long, right? Then you go short, right? Okay. And then again flattening, change of structure, boom. This is what we need to capture. Now this is happening on hourly basis. When market is flat, 90 degrees, these two lines are not curving, it is just rotating. What does that mean? It is collecting contracts, collecting inventory for the next move up. So you can see, now once we have this vibration, it worked twice, right? Now you can see from the top to bottom also, you can see how far from top to bottom it is going. You can see all the reflections are coming at these edges. Now we teach you how many things you need to track, how to track it, right? So look at this, high to low, low to high. All right, and then I can keep tracing it. Boom. Sorry. So here is the kicker, right? This is, now you need to have multiple of these, as I said, not just one. You need to have a couple of them. 2 or 3 is enough. 3 is enough maximum for now. So I'm looking for, okay, from here to here, I'm expecting it to go here. See this also, I'm tracing the price, expecting it to go here, right? It came close. So I'm looking at, okay, hey, most likely it's going to take a flip. And it does. And it flips from the VWAP. You get some ideas where market is going very clearly. All right. As I said, just keep bunch of them. Now this is the max distance reached. Let's adjust it from here. Expectation is it will reverse from here. There we go. And we have covered this many times in public domain. All right, cool. From here, expecting it to go here, it comes down, the market is flat. So now once market goes flat and becomes trendy, right, we want to catch this. Now I'm putting it on hourly basis. I can go to a higher time frame to really see what's really going on. So I can just be one side bias trader. If not, you have this reflection points. So now with this measurements, go and check. Right, you have to go and check. How many points are you getting? Look at this. 1,000 points, 1,000 points, 1,000 points, 1,000 points, right? This is where the big money is made by big boys. All right, nothing else to be said about it. Okay. Now market is going to shift its frequency, right? This one came down very hard. Now we have a new structure. I got rid of the older structure. Let me get rid of, actually instead of getting rid of it, let me create a new one. Okay, so this is even bigger, so I'm gonna keep stretching it. Okay, I'm going to do a quick test. Okay, market is vibrating to these pivots are vibrating here, and we're good to go. You can just see that, right? And we bring it over. So let's assume that we do a good job finding it properly, and we do it properly. Now I'm tracing it, boom. When vertically price and time meet from the offset, and look at this, boom, huge moves. Dealing with 300, 400 point moves, right? We can restrict technical trading options versus this versus that. All right, okay, cool. Look at this, right? So we found the right frequency. It is hitting and reversing. Plus we have other ones, right? So this is how you can see the reversals. Offset it, and if you want to really wait for confirmation, let it at least hourly VWAP tip over, but you know where it is coming from. And then this is what we need to catch. Look at these, right? This yellow line is telling you market is going down. Apex is there. All right, same patterns. You don't see it, or you don't want to see it, right? Sometimes. Right, so I'm gonna go on here like this, but I'm expecting a move. This guy broke even. Boom. Sorry, not broke even, broke below, and that it removed the inventory from these trend lines. Right? These are trend lines or inventory points. The inventory doesn't have to be. These are closing. Banks would like to do business close to VWAP's inventory levels, right? Inventory levels, inventory levels, inventory levels. The inventory levels. All right. So I think you got the idea. This is how this wonderful indicator is going to keep you in a very profitable situation. And those folks who have this, aren't you lucky? And I think that is all we wanted to discuss this on multi-time frame VWAPs, looking at the reflection points, looking at where market is going and the trend and direction and the bias. Where are we right now? You want to go short here? What do you think about that? Right? There we go. End of March, we already know this market is going to go up, so you'd be holding 7,000 points, my friends. All right. Thank you.